There are a lot of trends that you don't get to access in India, right? For example, now AI. What would you invest in if you want AI exposure here in the local markets? Whereas newer technologies are coming in other countries, especially in the US, where you see a lot of new technologies coming up. When we started vested in 2019, I remember the rupee was 70 rupees at that point in time, and now it's touching 90. Even though our wealth might be increasing here in India, if we look at it in terms of global relevance, it actually sort of depreciates in a way every year. One of the biggest myths is that economy and stock market are directly linked. They are not actually. The economy, the GDP moves separately. The stock market may not move along with that GDP.
For a retail investor in India, we want to go and diversify into global market. What would be a good framework for us to start?
So what we've seen is
Hi Viram, welcome to Power of Money. The first thing that comes to my mind when I think about US stocks is why. Everyone today believes on the India growth story, the next decade is India's. Why go global? Why go into US? What's your take on that?
Firstly, thanks for having me here. It's a pleasure. And so, in terms of investing globally or investing into the US, I think that's something that we as Indians have not caught on to yet, and I think now slowly it's been growing. There are 3 or 4 reasons, and then I'll sort of walk you through what we've seen happen in other countries as well. Now, in terms of the reasons, one big one is that there are a lot of trends that you don't get to access in India, right? Like for example, now AI. What would you invest in if you want AI exposure here in the local markets? Whereas newer technologies are coming in other countries, especially in the US, where you see a lot of new technologies coming up and companies that are listed also in those technologies. So Nvidia is there, AMD is there. We've seen a lot of people get interested in those companies. Even other themes like gene editing, that's something that's been coming up. Space as a sector, that's also there. So a lot of these up and coming technologies you may not get exposure in your domestic market, and that's where you want to go global, and that's where possibly the US is a space where you see a lot of these up and coming themes that play out. The other is just we've seen this word kind of become popular nowadays, is this multipolar world. And what that essentially means is it's not going to be one country that is the leader amongst all of them. It's going to be multi countries that are leaders and multiple superpowers in the world going ahead. And what we along with that feel that it should be a multipolar investment portfolio that you have, because you cannot, in today's geopolitical world, cannot have all your sort of wealth in just one geography or in one country, right? You don't know what happens. So you want to be diversified geographically. You want to make sure that you're taking advantage of course trends, but also just risk wise you're reducing your risk by going into multiple countries, multiple geographies, right? So that's the other aspect of it. The third is the rupee depreciation. So when we started vested in 2019, I remember the rupee was 70 rupees at that point in time, and now it's touching 90, right? So even though our wealth might be increasing here in India, if we look at it in terms of global relevance, it actually sort of depreciates in a way every year, right? And 3 to 4% every year. But if you're actually investing internationally, you get to take advantage of that in terms of returns. So if you, let's say, would have just transferred it into dollars and kept your money there, it would have increased 3 to 4% every year without having to do anything. So that one should take advantage of, balance it out in their portfolio. And I think the last one is purely from a returns standpoint as well. Just returns wise, a lot of people feel like India is growing so fast as an economy, the stock market will also do well. So one of the biggest myths is that economy and stock market are directly linked. They are not actually. The economy, the GDP moves separately. The stock market may not move along with that GDP, right? So just thinking that okay, a fast growing economy means a fast growing stock market is not necessary. And keeping that in mind, globally there are a lot of countries that are giving good returns. Even the US markets themselves have done well. But like for example, the last year Poland was like the best performing market, gave like 40-50% return. Colombia has been a market that's been doing really well. China is seeing a resurgence, right? While India has been flat, even though the GDP has been growing very well. So again, from a return standpoint, you want to balance it out so that you take advantage of your countries out there that are doing well. And lastly, I think what we've seen in other countries, so and which is why we believe now India is going to sort of catch on, is as a country becomes developed, so as the UK became developed, or US or Japan, more and more of their assets do tend to get diversified internationally. So today in the US and Japan, a person's portfolio on average has 20% diversification globally.
Okay.
UK has 40% diversification. China, over the last 10, 15 years, has now risen to 5 to 10% diversification globally of overall sort of financial assets of the country.
Okay.
And India, when we started off, was around like 0.5%, and today is like, I think, getting closer towards 1%. So the theory we have is that as the country becomes more developed, as people become more wealthier, they do want global opportunities, and they naturally sort of see, because they tap out in the domestic market. Now, as you're becoming wealthier, you still want to invest in other different products, and so that's when you start looking at, okay, what can I do internationally? And I feel that's where India will also sort of latch on to over the next couple of decades.
So in terms of US market, right? I mean, given that it's developed, given India is still in a developing stage, I assume it would develop, like it would have more alpha. And US would be more, on the standard route. Like, what is the kind of returns that one should expect if you are investing in US markets? Because Nifty, for example, has given 12-13% returns over the last 10 years. What is that like one should expect in the US markets?
Another myth that we come across is people feel like, oh my God, because US is developed, the returns are not going to be good. In fact, it's been, I mean, last 10 years now have been the best performing market, and it's done actually similar to India market. So that's what we always say. You can look at it as you'll get similar returns, but you're reducing your risk. That's how you can think about why should one invest internationally. So I think it's been about 11-12% annual returns, and the additional kicker for us is the dollar depreciation. So now, even though the underlying US stock market gave, let's say, a 10 to 12% return, but because the rupee depreciated each year by 3%, you add another 3% to when you bring the money back in rupees, you will get an additional sort of sum because the rupee depreciated as well.
Got it. Yeah. And given that, of course, when you are investing in equity, you're investing for the long term. And if we talk about US markets, I've been reading reports on, there's an impending recession and, markets will correct. Yeah. What's your view on, markets in general internationally?
So specifically the US, there have been these reports for a long period of time. And again, that's where it comes to whether the economy itself and the stock market itself are going to be similar. Now, in the US specifically, what happens is a lot of companies are global, actually. So if you look at the top 7 technology companies, their revenues, if you look at the split, it's actually very global, right? And so in a way, if you're investing in an Apple through the US markets, you're actually getting exposure to Apple's global growth. So you're not necessarily linking your returns to the US economy. The US economy, while is a large part of it, but they have growing businesses in India, in China. Tesla also similarly going into a bunch of markets. So if you own good quality businesses there, they give you global exposure by default because of the nature of their business. And so you may not be as affected by a particular country's recession.
Okay. So is it fair to then assume that whatever, and I believe, US is leading the AI wave. So I think it's sort of, it will still lead the charts, but for a long term, it's okay to invest in a market like US for like, say, a 10-year horizon.
Oh, definitely. I mean, just the technology sort of breakthroughs that are coming through there are really good. I think some of the advantages the US does have in terms of its education institutions that lead to new companies coming up and all of that, I think those will be there. And global brands that are available there, right? Like the likes of Nike, Starbucks, those you would otherwise not get a chance to invest in elsewhere. So those will be there, and those we know are institutions for long. Banks also, Chase, Goldman, all of those. So I think just good quality businesses you will definitely find in the US market, and should have it as part of your strategy.
Okay, so let's talk in detail, Viram, about investing in US market. Like the first question that comes to my mind is, are there any legal complications, tax compliances when I have to invest as a retail investor in US market? So tell us more on, if I am starting out, what are the nuances that I need to take care of with respect to legal, taxes, etc.?
Yeah. So that is important because it's a new domain for a lot of people, and one of the first things that people need to know is that it is legal to invest from India in the international markets. And what says that it's legal is this scheme from the RBI. It's called the Liberalized Remittance Scheme. And basically what it governs is how much money you can send abroad in a year.
Okay.
And because you're investing internationally, you will send money across borders. So you will convert your rupee into dollar when you're investing. And now to convert that into dollars, RBI says that you can convert up to $2.5 lakh a year per individual. So that much is the maximum amount. And then what you can do with that amount, they say that you can use it for education if you're studying abroad. You can use it when you're traveling.
Okay.
Along with that, you can use it to invest into listed securities globally or funds that are available globally. So they've made it very clear now in terms of what you can do. So that's a nuance one needs to keep in mind, is that maximum you can do $250,000, and that it is legal in the first place
Okay.
to do that. The second one is, which is a sort of subtle thing, is that you cannot invest in certain instruments. So
Okay,
within this, they've said that you cannot take margin, for example. So you cannot borrow and invest internationally.
Okay.
You cannot do speculative products, so no F&O trading.
Okay.
You cannot invest in currency pairs, so you can't do like INR USD trading or
Okay.
any currency. In fact, you can't do that. And additionally, they've said that you cannot keep cash idle for more than 6 months. So let's say you transfer $10,000, you have to put it in an instrument. You have to invest them. You can't just keep it there for 5 years and be like, okay, I'm not going to do anything.
Okay, I can't just enjoy the
Ha,
appreciation of
exactly.
the currency.
You cannot. They
Okay.
do not want that to
Okay.
happen. So you have to put it and earn on it. Essentially, is what they
Okay.
want. And as long as you do all of that, you're all good. So I think that's primarily from the what you can do and what you cannot invest in aspect.
Okay.
And then comes the tax bit. And on the tax side of things, there are no taxes you will pay abroad. You will pay taxes only in India.
Okay.
And
That's also subject to liquidation, like we do for Indian mutual funds. If we sort of redeem a stock,
Yes.
only then
Correct.
taxes are applicable.
Correct.
Okay.
Yeah. So only when you liquidate is when you have to pay taxes, and basically the tax rate is the same, 12.5% for long term.
Okay.
Short term is as per your income tax slab. The difference is that it's 2 years instead of 1 year. So 2 years is the threshold for long term. So you have to hold it for 2 years.
Okay.
Then it becomes long term. Versus I think in India it's 1 year.
Okay.
Yeah.
Okay.
And the other nuance is that dividends. So if you're investing in a stock directly that's paying dividends, that has a withholding. So 25% is withheld in the US, which means that if you earned $100 of dividends, 25 will be held by the US government and 75 will be paid out to you.
Okay.
That 75, you can take credit of the $25 that you paid in the US in India, because US and India have a double tax avoidance agreement. It's called the DTA. May sound too complicated. Basically, for somebody, just they should know that you can take credit here. You don't need to pay tax again. So that's what it is.
Okay, but the dividend that I get is also taxed as per the capital gains or
Income tax slab.
income tax slab.
Yes.
Like it applies to any Indian stock as well.
Yes.
Similar to that.
Correct. So now
Okay.
with this latest budget that came in, they streamlined a lot of things. Earlier there was indexation, all of that. Now
Right.
it's become quite simple.
Okay. And another question I have, so there are also global mutual funds, so where I don't need to sort of convert my money into USD and invest there, but I can just sort of invest in these global mutual funds. What is the nuance there? Why is
Yeah.
that not popular enough?
Yeah. So that is actually, I think, a good option. And if you do not really want to, do a lot of hassles and all of these, then you can go through that route as well. The challenge today is that it has a cap in terms of how much money can be invested as a mutual fund industry globally. It's a 7 billion cap.
Okay.
And that cap has been hit. So a lot of these funds are not taking new
Okay.
subscriptions.
Is that a yearly cap? Like when does that hit
No,
a
it's like
reset?
a all-time industry, irrespective,
So
at any point
unless
in time.
new mutual funds come in, I can't invest through the mutual fund route.
Even
is
a
it?
new one, they cannot invest till the 7 billion cap. As an industry, the mutual fund industry
okay.
cannot have more than 7 billion
Okay.
invested abroad. So, but that's an old cap. It may be revised soon, but that's a challenge today. Otherwise, it's a good option. Otherwise, the pros and cons are the same as, why invest directly in India versus a fund, right? You get more control, you get more flexibility. Like if you want to just go, overload on AI and you really believe in it, then you won't get an option here from a fund. But otherwise, you can create your own portfolio through the
Right.
direct mechanism.
Right.
One thing I will mention there is now through Gift City, which is a newer sort of jurisdiction within India that's coming up, there are funds which are managed by Indian fund managers.
Okay.
So, a bunch of these asset managers are now launching mutual funds there, which is basically going to provide global access. So,
Okay. How does that work? Can you give that, like, they are based out of the Gift City that is in India,
Yes.
but I can invest in those instruments and, get exposure to
Correct.
global market.
Correct. So
Okay.
it's the hybrid of what we have been doing and what India mutual funds have been doing, which is, since it's the same asset manager you're familiar with, like an HDFC, DSP, Mirai. It's their mutual fund. It's a retail mutual fund, which the minimum is $5,000, but it is all denominated in dollars.
Okay.
Yeah.
So is that live now? Like, can I invest in something today?
Yes. So the first retail mutual fund went live. I think the NFO started a couple of weeks back.
Okay, which one
And
is this?
this is the DSP India DSP Global Mutual Fund.
Okay,
Yeah, and that will be available on the vested platform also. So
okay,
somebody will be able to transfer money and invest into that mutual fund, which is a Gift City mutual fund.
okay.
So
But do I need to invest in that via USD only, or can I just invest through my INR?
USD only.
USD only.
Yes,
Okay,
yes. So
okay. So
you
I
have
need to
to
go through the
convert.
conversion.
Yeah, yeah. So
Understood.
that LRS, which is that remittance scheme, does become applicable.
Okay.
But then it is all still within India and regulated by Indian regulators.
Understood.
Yeah.
Understood. So, next question, I think, and thanks for clarifying this, because there's a lot of
Yeah.
sort of confusion around how to invest, where to get started. So, and looks like pretty straightforward and simple to do that. Now, suppose, and you have convinced me to do
Yeah.
invest in US market. The next thing is where to invest. And again, I come from that bias that US being a developed country, it's a more passive market. And actually, data also shows that, passives are the general sort of the
Yeah.
most bought thing there. Why do we need to go after certain stocks? Like, is there still alpha in the US market?
So it really depends. And I think if one doesn't do this, like doesn't put significant time and effort into it, then an ETF or a mutual fund is the best route to get started, even in the US markets. Like there are index ETFs, the S&P 500, NASDAQ 100. Those are good enough to start. Or like how we spoke about earlier, you can look at ETFs that are investing in the developed equity or emerging equity, and just keep that as a simple portfolio. So we have some of these managed portfolios on our platform where you can basically pick one of these which has this allocation already predetermined, and we only balance it and rebalance it and all of that. So
Okay.
that helps people get started. Now, if you do have certain sort of views and you spend time on researching companies, and there are a lot of opportunities, a lot of alpha opportunities actually also. For me, one of my favorite sectors is the financial service sector, naturally, because I'm in there, and there are a lot of companies that I track closely, and have found sort of good opportunities within them. So what we've seen is, what works well is either you are spending time and researching a whole host of sectors, or you work in a particular sector and you know that sector. So, and there's naturally global companies in that sector. So if you work in healthcare, for example, you will know a bunch of companies that are doing well. And so
Yeah.
we've seen people who are working in healthcare want to invest in those global companies, right? Or the third thing that works is brands that you know. Right, like Warren Buffett said, that you invest in what you essentially know. And so if you're familiar with the product, you like it, you see that the company is doing well, then naturally that becomes again a place for you to go and pick a particular stock and invest in them.
Got it.
Yeah.
So, what does your portfolio look like, Viram? How much is in Indian
Yeah.
equity, US equity, or globally diversified? How does that look
Yeah.
like?
I mean, for me, because of what I do, a lot of it is international, and so I actually have three or four sort of categories that I look at. So India, I typically just do mutual fund SIPs, so that is anyway ongoing. In the global space, I sort of look at as a core portfolio, which is maybe 40-50% of the portfolio, where I don't really mess around with it a lot. So it's just
Okay.
simple ETFs. Right, and there are 3 or 4 ETFs that I have there, and I just keep doing a regular sort of investment into that.
Okay.
And then beyond that, the rest 50% is my exciting money, which I like to
Got
do
it.
research, and which I like to sort of deploy at different points in time.
Right.
So that's what I do. And then I've been doing now, as being in the sort of startup industry, doing some of these early stage investments as well, and both globally and in India. So that's been an interesting aspect of the portfolio over the last 3-4 years.
Got it. So, I mean, the strategy that you said, right, core and the exciting money or the satellite, it's
Yeah.
similar like how even in Indian market you would, suggest that, keep the core and satellite. Now, even in the core, like in Indian, just drawing that parlance, there's some in large, mid, small.
Yeah.
So, how does that work for you? What is your core portfolio like?
Yeah. So I have essentially done small and S&P 500, NASDAQ 100. So there are a couple of ETFs, because small cap, I have no idea in the US. So I just rely on certain ETFs that are there, which provide, like, I think the Russell 2000
Okay.
exposure. So that's the index that covers pretty much everything. Or S&P 500 is all large cap, or NASDAQ 100 is all large cap. So I think between both of those, I feel like I have enough of a split.
Okay.
And then I add some debt for sort of stability. So there are different ETFs that you can look at global debt. So those are like global equities. Global debt is also something which is
Okay.
interesting. So just overall global debt and maybe a small portion to high yield debt as well. So
Okay.
I think that rounds up the core pretty well.
So, what are the kind of returns that we make? Like, for example, in the global debt or the small caps, what are the kind of returns that you can typically make?
I mean, all of this combined, I think, has given a 10-11% over the last 3 years in dollar terms.
Okay.
So because now the S&P 500 has done quite well. And on the debt side, it's been okay, but it gives a bit of stability at this point in time. So if this core portfolio, the last year, this exact portfolio has done about, for me, I was just checking recently, was like 10%. So
Okay.
yeah, in dollar terms, which is with rupee depreciation about 13%. So that's good enough.
Got it. So, just like in Indian market,
Yeah.
does also small cap would have high risk, high return. So, what kind of returns would you expect in a small cap ETF in a US market?
It is, I think about 15 to 17% is
Okay.
what we've seen in small caps specifically, but way more volatile, and which is the higher risk.
Got it.
Yeah.
So, when I'm for a retail investor in India who is, currently even the Indian equity market is such a scratch surface. If we want to go out and diversify, we are currently at 0.5%, as you
Yeah.
said. We want to go and diversify into global market. What would be a good framework for us to start?
So what we've seen is sort of the global markets start becoming interesting once you're financially educated, and in your financial sort of journey, irrespective of how much money you have, you may not have like a crazy 100 crore portfolio, but as you start with maybe mutual funds, then you try some equities, Indian equities. Once you've done both of those is when you start realizing, okay, what do I do beyond this? And I think that's the right time for somebody to start looking international as well, because you can't straight jump the gun to international. Like, you will not understand the nuances. So for somebody who's just getting started, I think the domestic markets have a lot of opportunities. But if you are 5-6 years into your journey, then you can start looking at, okay, how can I build a more sustainable portfolio? If you have international goals like travel, you mentioned, or if somebody's going to go study abroad, or your kids are going to go study abroad, then again you should start thinking of international investing. So that becomes another trigger point for people to start. We've seen a lot of folks who have kids 2-3 years old, and they know that somewhere they're going to go study abroad at any point in time. And so that's when they again get interested. Okay, what can I do? How can I start building that corpus from now? So
Okay.
that's another sort of entry point. The third tends to be it's just again familiarity. So you've started with India and you know a lot of companies globally. Is when for a longest period of time, Tesla was like used to joke, it's our acquisition engine for the company because people used to just come to start investing in Tesla, which is too risky. But I think that familiarity or any trend now, Nvidia is another such popular company.
True.
Is when how people get started.
Yeah, I remember I did my first one with Apple because of my iPhone. Yeah.
Correct. So a brand that you really like and you want to start investing is when you start. But typically, if you're financially educated, is when you should start. And then once you start, a framework to keep in mind is to have a sort of not go overboard in terms of technology companies. So a lot of people get too excited and then they put it into all of the fangs, and then it becomes a very risky portfolio when you may not be capable of taking that much risk. So having certain core sort of ETFs that you're investing internationally, and then having some sort of play around money which you can your satellite is where all the brands that you like you can invest in.
Got it. And then are there any risks associated with all of this, right? There's of course Trump and multiple geopolitical things that keep happening. So if you are invested in global markets, what are the things that you should look out for?
So one is this over concentration in technology as a sector. We've seen that, and we try to educate our customer base to not do that. And I think now they are, and people are sort of looking beyond technology as well, which is exciting. So to avoid over concentration is one risk. The other is there is currency fluctuations that happen, right? And so one should just be aware of what's happening there, and because in India, when you're investing in rupee, that is not a factor you even consider, but this is something that you should know. And I think third is you want to make sure you're investing only through regulated entities. So there are a lot of platforms at a global level which will keep marketing to you in this digital world, and we've seen people get carried away, do FX trading, for example, when it's not allowed in India. So you want to go through platforms which are created for the Indian investor and also that are regulated. Like for us at Vested, we are a broker dealer in the US as well. So we make sure that, everything, all protections that a US resident is getting, our customers are also getting. So that way you are, very well assured of, and you can sort of have trust in a platform that will make sure that your money is safe. So I think those are the three, four things you should keep in mind.
Got it. Got it. So we spoke a lot about US because, of course, when we think about global, US is the first thing that comes to our mind. But we started with, there are multiple countries that have been giving good returns. So, towards the end, I would want to also ask, what are some key economies that you see emerging in today's time for, say, the next 5 years?
So we've now started seeing a lot of like US plus strategies, and three or four economies that recently people have been asking us. One, in the early part of the year, Brazil was something that was quite popular, and along with that, China recently has been popular as well. So funds that are investing in the China technology sector or overall into the China indexes have been quite popular. BYD as a company has been one that now in India also you start seeing a lot of cars. So that's been something that people have been wanting to invest in. So those two are there, and then Europe in general also is having a little bit of a resurgence. Their markets have been flat for a long period of time, but now as trade realigns globally, Europe is also now starting to see some more opportunities.
Any particular country in Europe, or?
Europe is difficult. I mean, I don't have any particular view on a country there. I think just EU in general as an area has become more and more interesting. So there are Europe-focused funds that you can invest in, and so I think these the four geographies have been quite interesting.
Got it. Yeah. And I think last note, Viram, what are the key sectors that you see globally that someone who is decently invested in should sort of pay attention to?
Technology is definitely there. You cannot ignore it. Within technology, there are a few subsectors. So AI is one for sure, and even though there has been a run up recently, there is a lot of opportunity still coming ahead. One not so sexy sector is the cybersecurity sector. Actually, with more and more AI, in fact, the cybersecurity space is now getting a lot more important. And so in fact we have a portfolio around that as well, which has a lot of interesting companies, which a lot of us don't really see, right? They are not brands, but they are in fact on the back end very, very important. So I think those two are very interesting in the technology space. There is an up and coming space sector also. It is very, very frontier, but if somebody wants to look at that, I think that could be interesting as well. Beyond technology, financial services is my favorite. So there are some banks available at very good valuations in the global markets. There are up and coming fintechs that are sort of on a global level. So there are some Latin American companies that are also listed in the US markets.
Okay.
There are, of course, brokerages that are there in on the US market. So those are interesting. And I think healthcare also nowadays is quite popular. In India we've been seeing now, Eli Lilly has been doing a bunch of ads. I saw a billboard recently only, and so they are having a good time. There are Novo Nordisk is another one. So now as AI accelerates drug development, I think that sector is going to have a very interesting time going forward. And then sort of healthcare, genetics is also another frontier sector that's quite interesting. So yeah, a lot to do. There are also commodities that keep coming in and out of vague. Like oil was interesting a couple of years back when oil prices have gone negative, and a lot of people used to ask us what's happening and all of that. And so those keep coming in and out. And personally, I don't do much of that. But yeah, these are 3-4 that I track.
Got it. Interesting. No, great, Viram. Thanks for sharing so many insights. I think this was truly a masterclass for someone who is sort of looking to invest in the US market. So thank you so much for sharing all of these valuable insights.
Of course. My pleasure. My pleasure. Thanks for having me.
Thank you.
Yeah.